Hey everyone, Tom here. Today we'll be talking about the latest stock market news in what will be a massive week of company earnings and our technical analysis levels for the S&P 500, gold and US dollar index. We're seeing a lot of euphoria right now in certain stocks and certain precious metals. Do we need to be careful or are they being manipulated? Stay tuned. So one of the things we like to do first when it comes to doing an analysis of the markets is to have a look at a screener for the day. And these are the futures in terms of all the main kind of markets and commodities around the world. This is provided by finviz.com and it's a free resource you can get, so definitely check that out. So one day relative performance, we have silver doing 6% today, gold up 2%, platinum up 2%. And these are all massive benefactors of the last couple of weeks, with gold hitting that $1,800 an ounce, breaking past that, quickly gravitating to $1,900 an ounce, and now going for it all, the $2,000 an ounce. Can it get there? We'll soon find out. The US dollar has been incredibly weak, and this is due to a whole bunch of different reasons, but obviously all of the printing and all of the things that have gone on during this crisis have not been good for the US dollar. And several of these precious metals are basically moving to all-time highs, or at least having an incredible appreciation over the last couple of weeks. A lot of this comes down to also what's happening in July, and that's why I want to make this video. So the White House officials are hard at work trying to make sure that everybody is feeling okay about the stock market and about the current economy. Basically, on the 31st of July, $600 weekly payment will end, and we need to see some kind of package. What will that package be? Well, I of course see a lot of mentions about $1,200 stimulus checks for Americans, and this again comes to part of the reason why potentially the US dollar is further weakening. When we go over to gold, I think this is the best technical to start with today before we get into the S&P 500 dollar index and some of the FAANG stocks. Look at this move on gold. We've seen an incredible bullish move on gold over this year. All of it really was triggered when it broke past this resistance, and it broke past all of the key areas, being $1,550, $1,800, and now $1,900 an ounce. The reason I want to bring up the euphoria here is we're starting to move very far away from certain moving averages, and we're moving very aggressively up. And this has me worried in terms of when things hit usually their gravitational pull, maybe $2,000 an ounce, they have a tendency to start selling off or blowing off, which is why I put that video image up today. Over here on the left-hand side, we actually have the month that it ended last time. And the month that ended last time was actually the August month. And where are we now? We're in July 2020. So that was the end, and it was followed by that incredible big bullish move, followed by a massive blow off after that. Two massive candles followed by each other. And that's a clear indication usually of the end of a serious move. So with gold, what is it like doing on the way up? Well, it's like kind of hugging this 20 moving average, and it usually comes back and tries to test this zone. Look how far away we are from the 20 exponential moving average right now. We're very far away, and I think really what's pushing this right now is interest in gold and a huge amount of people trying to get into it. I'm relatively bullish on gold in terms of my own personal opinion, but whenever I see price action like this, I always want to have a plan where I have a take profit, I have a stop loss criteria, and I know what I'm doing. I always have a plan, and I just hold it and say it's all good, everything will be okay. It will be over the long term because gold will appreciate usually over the long term, but that does not mean that you don't want to have a plan when it's sitting at 1940 levels. We mentioned in the intro that we're talking about dollar index as well. At the same time that gold is appreciating, the US dollar is breaking key support. So it broke that key support on Friday, and the futures have continued further down. Usually with dollar index, what we would expect is that the dollar index would probably come back up and try to test this previous level of support, and then that would become resistance. If that was to occur, that is around the 94 kind of 70 zone, and then potentially further decline off this stimulus and other plans that are coming in from Congress, and just the general opinion of the US dollar right now, as well as all of the other geopolitical and other things we won't go into in this video. So why did I put in the description that we could be seeing a bit of manipulation going on in the markets? Well, I well documented things like Hertz and of course the blow up in Hertz and that meteoric rise of a basically bankrupt company having some kind of worth due to a huge amount of manipulation in the markets. Well, we're seeing that again. Of course, I'm going to look at Robinhood and the Robinhood tracker just because I want to discuss some of the companies here. And one of them is Nikola and of course Tesla as well. I actually like Tesla and in terms of I like the company. I'm not too sure on Nikola in terms of its real worth or anything like that. But what I can tell you is if you look at a chart from Nikola, it was an incredible rise and an incredible blow off. And this is just a warning to anybody that's looking at investing in these kind of meteoric markets. If you see a market and something seems too good to be true, it often can be. And of course, this stock went all the way up to $94 and is now coming back down to earth at 30. And potentially it may even be overvalued there. It's not a stock that I'm personally that interested in. When it comes to things like Tesla though, what does Tesla do over time? Well, Tesla often has big moves up, followed by kind of a test or try to test of the resistance, and then it's been kind of weak and it comes back down to a moving average. Remember, I mentioned on gold before that it usually likes to come back down at some point and usually hit that 20. Does that mean you should short it down? You absolutely should never go against the trend. Always trade with the trend whenever possible, unless you get a massive clear signal that it's going the other way. So with Tesla, it's been hugging that 20. Look at the hug of the 20 exponential moving average. Then it broke out, went super euphoric, went all the way to $1,800. And then after earnings, while they were better than some people expected, it's come back down and it's tested the 20 at this stage. And of course, we're waiting for a market open. And it looks like at this stage, we're sitting at about $1,408 pre-market. So we're right around that 20 exponential moving average, which has been holding it in place for some time. From a price action perspective, we'd be looking at, of course, the resistance of 1,000 being incredibly strong buying from the retail herd and also from pro traders. But this to me is a huge amount of manipulation in the market. It's not only the retail traders getting into it, it's also Wall Street playing their game with what they know happens time and time again and getting their money out of the market just before, of course, it starts crashing or at least it comes back down. $400 a share is a lot of money. So remember, what's happened over these last couple of days and week has been massive in terms of manipulation on the markets. When it comes to the FAANG stocks and what I want to discuss before the S&P 500, these are the ones that if you're an S&P 500 or you're a NASDAQ trader or any kind of indice trader, you need to be looking at right now. The tensions between, of course, US and China really does affect these companies. I've talked to you all about this before. I've talked to you about basically what happened to this index or what happened to these stocks during that 18 into 19 crash in the markets and why these actually underperformed the rest of the market because of that geopolitical stuff. So we've had a massive rise in FAANG, and again, this has been hugging that 20 moving average. If you're ever looking at, when you're looking at a super bullish kind of move on markets, they often come back and test this 20 exponential moving average. We've seen the same test on the FAANG index as a whole. So this is a key level this week that we should be looking out for. Well, if we go over to Microsoft and we have a look at that, well, Microsoft actually broke past the 20 moving average. We were talking about this last week, and that comes off the back of the earnings and everything that we actually know in the stock market. Held that 20 moving average, and then it's come back down and it's testing this support now. It's testing the 50 moving average, and I would expect even potentially down to here might be a possibility, this 190 zone. There's going to be a bit of buying there, I would say, just from a pure resistance area becomes a support zone. So this is going to be a clear area as well with Microsoft. What does this mean as us as investors and traders? Well, it means that the market is at not only a critical point, but we're seeing a huge move into gold. We're seeing a huge move out of the dollar. And we're seeing a bit of uncertainty coming back into the market about which stocks are really worth what they say. So the kind of euphoria is falling off a little bit, and now it's the reality of the situation that's coming back in. And that's important from a sentiment perspective. How do we trade this or invest in this? Well, the best thing to do is to follow the price action, as it's very difficult to break down any of those kind of points where we can't say, oh, this particular thing or this particular thing are actually impacting this. We need to think, what's the price action telling us? And whenever we see something go euphoric, we know the manipulation is coming. Even before this crisis, look how high Microsoft got away from that 20 moving average. It was still set for a pullback, and it was going to pull back before the crisis even began. That's the type of thing that you need to be looking out for as a stock market investor or trader. If we look at Amazon, one of those stocks that's done, of course, amazingly well as well, that's been holding that 20 exponential moving average. And it's the same story time and time again here. If you're looking at dips, these are potentially levels where it makes sense based on the current trend and what's happening. The key is, though, that the first one's already bought up. So if we look at Amazon here, what happened when it first touched that 20 exponential moving average? It bought up. Buyers were there. It's come back down, tested the zone again. And if it gets under this zone, so it gets under this 2900, that signals further selling into the 50, and then even possibly further selling into that 2500, where previous clear resistance and clear support will act as the area again. So these are the clear areas that make sense on something like Amazon. So it doesn't matter really what tech stock we're looking at right now, they're all presenting a very similar story, and something that you should be looking at when you're applying things to this week is, of course, Amazon and Apple and other stocks are reporting this week. So what about the S&P 500 right now? Well, the S&P 500 is really bouncing in that zone. It's hit the 3,200 many times on the futures. It's bounced up. As we always talk about, we want to make sure the real market is in the SPX, the one that's trading during the real volume day, shows us a clear sign. So right now, we're seeing this. I'd still expect it to pretty much come back down and test this 20. That's something that we talked about in our weekly analysis that we did yesterday. And where to next? Well, if it bounces up here and on the smaller time frames, we see that change of trend. So we see basically the trough, then we have a peak, then we have a higher trough, and we move up. Then that pretty much signals that we're going to go test the highs and then potentially break past that and go for the 3,400. If, however, we come back down and we break through, we've talked about the 3,150 level and then the 3,000 level being exposed. And if you're looking at dip buying, both of those levels make some sense for your favorite stocks. So hopefully you enjoyed the video. If you did, make sure to subscribe and like the video, and comment down below if you got to the end of this video with the key bit of information that you're looking at this week in the stock markets. It's always interesting to know which things people are looking at and why they're looking at it. Thanks everybody. Good luck this week. And remember, always have a plan whenever you're trading.